In this video, I'm going to describe the cost of goods manufactured schedule. Describe, using a flowchart, the flow of costs for a manufacturer. In order to create a cost of goods manufactured schedule, we have to understand the flow of costs for a manufacturer. We start with raw materials. We then add in direct materials. Finally, manufacturing overhead. As you know, these are the three manufacturing costs. As a product is being manufactured, all three of these costs are transferred into work in process, WIP for short. Once the manufacturing process is complete and the manufacturer has finished goods, the costs are transferred from WIP, work in process, into finished goods. Finished goods is an inventory account on the balance sheet under current assets. When the goods are sold, they will be transferred out of finished goods inventory into cost of goods sold, an expense account on the income statement. So what exactly is cost of goods manufactured? It's the total cost of all the products which have completed the manufacturing process and are now ready for sale. The cost of goods manufactured will be transferred from WIP, work in process, into the finished goods inventory. The finished goods inventory, again, is a current asset on the balance sheet. Why is it necessary to determine the cost of goods manufactured? The total cost of all goods which are ready for sale is needed to calculate the cost of goods sold. The cost of goods sold is an expense account on the income statement, and without a calculation for the cost of goods manufactured, we can't figure out the finished goods inventory. And without the finished goods inventory, we can't determine the cost of goods sold. Exactly what is the formula for calculating the cost of goods sold? We start with the opening finished goods inventory. We then add in the cost of goods manufactured. The total, or sum, equals the cost of goods available for sale. This is the cost of all the goods that have been available to clients or customers throughout the whole period. But in order to get to the cost of goods sold, we have to deduct the finished goods inventory at the end of the period. We deduct the finished goods inventory at the end of the period because those goods are still available for sale. By deducting the finished goods inventory at the end of the period from the cost of goods available for sale, we get to calculate the cost of goods sold. This is the cost of all the goods which have now been sold to customers during the period. It's an expense on the income statement. We just covered the calculating of the cost of goods sold. Notice we used the cost of goods manufactured. So what is the formula for calculating the cost of goods manufactured? It's actually incredibly similar to the formula for the cost of goods sold. However, we start with opening work in process. We then add in the total manufacturing cost. This is the total cost of all the direct materials, direct labor, and manufacturing overhead that was added into the work in process account during the period. If we add the two together, it's equal to the total cost of work in process inventory. The total cost of work in process inventory is 100% of the costs that were added into the work in process inventory account. By deducting the ending work in process inventory from the total cost of work in process inventory, we end up with the cost of goods manufactured. This is the total cost of all the finished goods which were manufactured during the period. So how do we calculate total manufacturing costs? We already know the formula for calculating total manufacturing costs. It's equal to direct material plus direct labor plus manufacturing overhead. That's the total manufacturing costs. How do all these formulas interrelate? Total manufacturing costs are used in the calculation for the cost of goods manufactured, and the cost of goods manufactured is used in the calculation of cost of goods sold. It's impossible to complete the statement of financial position, also called the balance sheet, and the income statement without completing these calculations. One of the most important calculations for this process is the cost of goods manufactured, and in order to calculate that, we use the cost of goods manufactured schedule. Let's take a look at the structure. You can see that the cost of goods manufactured schedule starts with the company name, then the name of the schedule, cost of goods manufactured schedule, and then the year-ended date. If the schedule is being completed for a month, then you say month-ended. Then we start with the opening work in process. As we noted in the formula on how to calculate the cost of goods manufactured, we start with work in process opening. We then add in all the manufacturing costs, starting with direct materials. In order to calculate the amount of direct materials that have been used in the manufacturing process, we start with raw material inventory opening. We then add in raw material purchases to calculate the total raw materials available for use. Then we deduct the raw materials at the end of the period, the closing raw materials. That allows us to calculate the direct materials used in the manufacturing process. Let's just move the page up a bit. Next, we add in direct labor. That's the simple one. Finally, we add in manufacturing overhead. Note that manufacturing overhead is equal to the total cost of all the indirect manufacturing costs. These would include things such as indirect materials, indirect labor, and any indirect manufacturing costs, such as depreciation on the factory building and equipment, factory insurance, factory maintenance, and factory utilities, just to name a few. By adding up all of the indirect costs, we end up with total manufacturing overhead. Remember total manufacturing costs and how it's calculated? It's equal to the total direct materials used plus the direct labor plus the total manufacturing overhead. We then add in the cost of work in process opening to get the total cost of work in process. Let's just move the page up a bit. We then deduct the work in process ending to calculate the cost of goods manufactured. Let's just pan out so that we can see the whole thing. In order to truly understand how to develop a cost of goods manufactured schedule, we're now going to work on ABC Manufacturing Limited. ABC Manufacturing Limited has the following information available at the end of the year. You'll notice there's a list of descriptions plus the dollar amount, and I've also provided a third column. That's to categorize all of the items in the list so that we know where to place it in the cost of goods manufactured schedule. Required: prepare the cost of goods manufactured schedule for the year. Let's go through each line item and determine whether it's a direct material, direct labor, or part of manufacturing overhead. Some of these items will be nothing. In that case, we're not going to use that third column. Let's get started. Raw materials inventory opening, $4,000. We're going to use that to calculate direct material, so I'll denote it as direct material. Raw materials inventory closing, $7,600. Again, we're going to use this to determine the direct materials used, so I'm going to denote it as direct materials, DM. Work in process opening, $32,000. This is what's going to start our cost of goods manufactured schedule, but it really doesn't belong to any particular section, so I'm going to leave it blank. Work in process closing, $28,000. Again, I'm going to leave this blank. Finished goods opening. I actually need this to calculate the cost of goods sold, so I'm going to denote it as cost of goods sold. Finished goods inventory closing, $69,000. Again, cost of goods sold. Raw material purchases. I'm going to use that to calculate the direct materials used, so denote it as direct materials. Depreciation factory. This definitely belongs as part of manufacturing overhead, so I'm going to denote it with an MOH. Sales commissions, $70,000. This is a period cost, and it's going to show up on the income statement as an operating expense, so I'm going to denote it with an X for expenses. Administrative expenses, $132,000. This is also a period cost, and therefore denoted with an X. Direct labor, $148,000. Well, this is direct labor, so I'm going to denote it with a DL. Factory supervisor salary, $14,000. This is part of the production process, but not direct, so therefore it's manufacturing overhead, MOH. Insurance factory building, $13,000. again part of manufacturing overhead, MOH. Factory machinery rent, $28,000, also indirect, manufacturing overhead, MOH. Property taxes factory, $11,000. This is also part of the manufacturing process, but indirect, and therefore added into manufacturing overhead, MOH. Sales, net, $692,900. This is the revenue on the income statement. Indirect labor, $8,000. The word indirect tells you that this is manufacturing overhead, MOH. Utilities, factory, again, indirect, part of the manufacturing process, manufacturing overhead, MOH. Delivery expense. This is a period cost and therefore part of the expenses on the income statement, denoted with an X. Indirect materials. The word indirect already tells you that this will be part of manufacturing overhead, MOH. Now that we've categorized almost all of the line items in the listing, we can move forward with creating the cost of goods manufactured schedule. Here I've provided a blank cost of goods manufactured schedule, and I'm just going to fill in the numbers we need for ABC Manufacturing Limited. Let's start with the company name. ABC Manufacturing Limited. Cost of goods manufactured schedule, year ended December 31st, 2000 XX. Our first line item, work in process opening. We know from our listing that this is equal to $32,000. We're now going to calculate direct materials by starting with raw materials inventory opening, $4,000. We have to add in the raw material purchases of $92,000. Total raw materials available for use, $96,000. Now we deduct the raw material inventory closing of $7,600 to calculate the direct materials used. Direct materials used, $88,400. That's it for direct materials. Moving on, direct labor, $148,000. We now need to calculate manufacturing overhead. There's no particular order to the accounts in the manufacturing overhead listing. The easiest thing to do is use the same order that they show up on the listing in the question. Every single account that is denoted as an MOH will be added into the listing of manufacturing overhead. We're going to start with depreciation factory, $35,000. Then factory supervisor salary, $14,000. Insurance factory building, $13,000. Factory machinery rent, $28,000. Property taxes factory, $11,000. Indirect labor, $8,000. Utilities factory, $19,000. And indirect materials, $6,000. Added together, total manufacturing overhead is equal to $134,000. Direct materials used of $88,400 plus direct labor of $148,000 plus total manufacturing overhead of $134,000 is equal to the total manufacturing costs of $370,400. Let's move the page up. Adding the work in process opening of $32,000 plus the total manufacturing costs of $370,400, we get the total cost of work in process, $402,400. We now have to deduct the work in process ending of $28,000. This allows us to calculate the cost of goods manufactured, $342,400. This is the total cost of all the goods which were finished the manufacturing process in this period for ABC Manufacturing Limited. Let's just pan back so we can see the whole thing at once. This is the cost of goods manufactured schedule in its entirety. So exactly how do we use this? We're going to use the cost of goods manufactured of $342,400 in order to calculate the cost of goods sold. And we'll do that in a future video. Thanks so much for watching.